What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Wednesday, March 27th. Okay, guys, Nvidia stock here today down $24.41 a share. That's minus 2.57% in regular trading hours. It's up about $1.50 or so in the after hours. But listen, as always, take the after hours with a grain of salt. Volume is particularly low during this time. Now, let's prep for tomorrow by pulling out as much possible bias as we can using things like the volume profile, right? Psychological levels, expected zones of elevated volume out of traders, okay? The options bias, and of course, the expected move. So let's take a look here, starting with our daily ritual, our volume profile analysis here on the 5-minute chart. Couple places that I want to, or a couple moves more so that I want to take a look at here. Going to be this fade off the open. All right. This move intraday, specifically just because we saw very few red candles in that move, and then the very obvious one, this big fade that we saw into the close. I want to take a look at that as well. So we take a look here, and just remember, we're looking for bias, right? I like to think of that volume profile as like peeling back another layer of the onion. It doesn't have to be the same as, or the bias more so, does not have to be the same as the price action. Like if we get a bullish move, it's actually commonly not the case that we see a similar bias, right? It's an entirely different thing. And it gives us added depth of understanding that we can apply to all the information that we'll go through after this. So let's start here from left to right. You can see here, very contextual open, a fade in volume, and then we kind of got equal, I suppose just red and green, out of context candles, which essentially just wash each other out. So that open, to me, there's no bias there. That's a wash. Now this lunchtime move to the upside, right? Yeah, we had some consecutive green candles. You know, that's an interesting thing to see, but truthfully, you know, it was so just average. You know, if these volume bars were pushing 500,000 per 5-minute bar consistently for 6 in a row, that would be heavy bullish bias. It's just the amount of volume is just way too contextual to pull anything out of there, at least for me. And now this close, we did get a few pops, right, in terms of red bars. And I think a lot of you guys are going to be looking at this bar. You have to understand that this is the first bar after the bell. And remember, it's very common that we see funds and institutions doing rebalancing after the bell. A lot of that's going to be driven by algorithms, okay? So I kind of ignore that, whether it's green or red, because it almost never leads to any substantial volume, at least typically, right? And you can see that there on the chart. Heading into the close, it was a rather contextual close, but I would argue, you know, semi-elevated volume on some of these red bars. We didn't see any consistent elevated volume, right? It was very pop and droppy in terms of volume, but there I would say just a small out of context bearish bias there. All right, now let's move on to the psychological self-fulfilling prophecy levels that I'm paying most attention to tomorrow. Now, starting on the 30-minute chart here, Nvidia did lose. It gave up that 50-period moving average here today. We talked about that a lot yesterday. We tested it on decent volume, slightly above average perhaps, and we broke down beneath there, okay? We came in for a retest later in the day, spending the majority of the day beneath that level, came in for a retest and faded. The fade itself, the volume really didn't pick up until into the close, but we did get elevated volume on the fade. So that now puts us back in this channel, right between the 200 period and the 50 period. Bulls, listen, any downside test of this 200 period, that's kind of like on the 30-minute at least, that's kind of our last hope, at least in terms of holding as a support level to stay within this channel. Now, the reason I say that is because you look like here today, on this break, I mean, it's very obvious. You look at the volume and the aggressive nature of the candle itself. We had some shorts entering on the break of that, right? And then you also saw the retest. Me, on a blue chip stock, you know, breakouts, I will commonly trade on like an in-play stock. But on a blue chip stock, I like to wait for the retest and then confirmation, which, you know, we saw that volume. It took a while to pick up, but we saw it continue to accelerate into the close, as discussed on the 5-minute. Now, I would expect a very similar thing upon a break downside of the 200 period. Now, listen, I'm not talking about a 30-second break. I'm not talking, oh, it breaks by 6 cents and all of a sudden you expect all these institutional shorts to enter. Context is so important, right? You typically will see elevated trading volume and a small bias shift upon a break and hold and confirmation. Okay, but that goes both ways. That goes to the upside as well. That goes for cracking the upside back above that 50 period as well. So we take a look here. It's about 2.25% away. You know, today was a 2.5% down day. That's well within the possibility of a single day move of Nvidia. So I'm also paying attention. Well, I'm paying attention to both the 50 period and the 200 period here on the 30-minute chart. And by the way, something that I think can really help you if you keep this in mind is perhaps, let's say we see a downside test of the 200 period, right? The stock comes down and tests this. You're going to see quite a few traders entering long off of the 200 period. Not that that's a particularly sophisticated way to trade simply off of the moving average test, right? I'm usually looking for a little bit more than just that. But a lot of people trade that way. There's a lot of money trading that way every day, right? So what happens is, and this goes both ways again, you get a lot of longs entering at this region. If you get a substantial break continuing downside, all the longs, a lot of them at least, are going to have their stops placed in similar places. And what happens when the stops trigger? Well, they all sell out of their positions. On top of that, you also get shorts entering for the break downside through. Okay? That's how you end up with a candle like that second 5-minute candle today. It's pure psychology. It's pure, really, I think, trading movement with algorithms mixed in. But listen, that goes both ways. I mean, you look back here on the 22nd, we had a similar thing occur here. Right off the rip, we got that break in a big pump upside. I think the way to really think about this, to kind of visualize this in the most effective way possible, think of, let's say you're on a platform, okay, you're 2 stories up, and you're looking down at a big crowd, maybe it's a concert, whatever it may be, and they're all moving together as kind of a wave, and they're moving back and forth with varying time going each direction. If you're at ground level, you're kind of just in the crowd getting pushed around. Right, it's very difficult to go against the grain in that case. I like to then think of the algorithms, let's say, are on like well, I'll say the second floor because let's say we're actually on the 3rd floor, right? And we're kind of looking down at the institutions and the algorithms looking down on the masses. Okay, we have to first try to understand, okay, how are the masses going to play this? And then we look one level up and say, how do we think the institutions and algorithms are going to try to play this to benefit off of the masses? And then how can we take both of their plays and try to position us on the 3rd floor to try to benefit off of that? And I think when you frame the question in that way, the game we're playing becomes a little bit more obvious that it's really just all psychology, right? So, for example, in this case, you have some longs entering off the 50 period. All right, they set their stops at arbitrary levels, though most of them in the same range. As it gets pushed down further, selling pressure increases, more and more stops begin to trigger. Algorithms likely are picking up on that and entering short, adding to the selling pressure. And eventually, all that momentum runs out of juice and bounces. How we want to play that is up to us. You can either play the momentum or the bounce. Both of them have their struggles and their difficulties, but there's no doubt about it. If you're just playing the masses game on the ground level, you're going to get trampled. And that whole theory is especially true when we're looking at something as simple, obvious, and widely used as moving averages, right? They are not complicated. But they're psychological indicators that everyone watches, so we have to also take a look at them and try to play them from a more advanced standpoint, for lack of a better word. And by the way, to better understand all this, that's why we spend so much time looking at volume, because the volume on all of these moves is a huge factor of all this. If you want to learn more, take a look at the gold server. The link for that's in the pinned comment. All right, let's move on now to the 4-hour chart. Take a look here. That 50 period moving average is yet again becoming more and more in play. Now, it is about 2.1% away, including the after-hours downside movement that we are seeing here. Well, downside at least in terms of the 4-hour chart, right? It's not actually going to be so exact on a 4-hour chart looking at like the closing price. Stock closed at 925-ish, currently at about 927, right? But taking into consideration that after-hours price, it's about 2.1% away to the downside. So that 50 period is well within play for a single day potential. But it's also a little choppy. Now, ideally, I would like to see a smoothing out more so, of that 50 period moving average to the upside, similar to like how it looked back in this region, with less aggressive upside pull away to maintain health of the stock. This upside move, it's been, if you're zoomed in on a 4-hour like this, it's actually relatively choppy. I like smooth upside moves in a name that stay close to psychological barriers. The 50 period on the 30 minute, the 50 period on the 4-hour, the 50 day on the daily, right? That's a great thing to stay close to. So listen, any downside test, obviously bulls, I don't care. We're already on the upside of it. Any test and any volume on the test, I just want to see that thing hold and start to pull away on accelerating volume on the bounce. Okay. Whereas bears, a downside break becomes a little bit more complicated, right? But you guys ideally would like to see a downside break on higher than average volume of that 50 period, which heads down into 900, which is a whole nother complication that we'll get into in a second. And then a retest on lower volume, okay, that shows a smaller sample size, confident in the retest. And then boom, a high volume confirmation. Big sample size, agrees. Now, let's take a look here at the daily chart. This is, of course, the most important chart. And if we zoom in, you can see here that we are holding off of this all-time high of 974. Okay. Today, we got as high as 963.75. You know, yesterday we got as high as 967.66. So we're pressing, getting close to that all-time high, but the market just isn't ready to give that thing a test. And we talked last night a lot about how today I think was going to be the battle of 950. And listen, the bulls lost that battle today. All right. Tomorrow, there's two things going on here that I'm primarily looking at. Listen, $900 a share. We gave up $24 today per share, right? So $900 a share is well within reason for a single day move. 900 is the nearest most important psychological level that I want to see Nvidia hold. It was the top end of that channel from 850 to 9 for days. And realistically, as a bull, I don't really want to re-enter that. Okay, if you're a bear, re-entering that is a necessity to get to your real goal, which is, you know, below 850 as soon as possible to break downside through that channel and kind of, I think, bust up a lot of bullish excitement, at least for the short term. But bulls, to completely avoid that, holding 9 is the necessity. All right, the more optimistic, well, or more so, I should say, the objective tomorrow, the ideal scenario is to crack 950, hold it finally, and then look to use 950, whether it's same day or in future days, as kind of that boost that Nvidia needs, that trampoline, right? A breakup through 950, retest 950, and use 950 as a higher stair step to make a jump up through 974, 975, up to that, I think what a lot of bulls are seeing as inevitable number of $1,000 a share. Which, really looking at this chart, is obviously the largest psychological level on the entire chart. 900 as of right now is a close second. Now, implied volatility, all right, is down a bit today, right? This is in comparison to the last few months. So we're now in the mid to lower end of that range. Just understand, again, the lower that goes, the more favorable conditions become to purchase contracts. And the lower this goes, also, that is going to hurt those who bought contracts when IV was higher. It doesn't necessarily mean they're going to lose money if they're still directionally correct. Think about it like this. You know, IV is, of course, the Greek vega, whereas movement in the stock is delta and so on. Theta, time decay. Think about delta and vega for a second. If you don't understand vega, I think you're at a massive disadvantage trading any options at all. I like to explain Vega like this. You have a water balloon with a certain amount of water in it, okay? Let's say you are directionally correct in the current movement of the stock. Let's say you have calls and the stock is going up, all right? And you bought these contracts. The hose is currently pushing more water into the water balloon, inflating it. But if IV, implied volatility, is going down, you also have a small leak in the contracts in the water balloon, right? And that leak is called Vega. In that same scenario, you bought calls, the price is going up, and IV is going up with it. You don't have a leak at all. There's now duct tape over the leak, and the hose is putting in even more water than it was before. Okay? It's juicing up the water balloon more so than just out of stock movement. All right? That works, obviously like both ways. If you sell to open contracts, you want IV to fall so you can buy them back cheaper. So, really, I think you should be playing implied volatility almost as much as you're playing the delta, the delta move, which is the move in stock price. Now, let's take a look at the expected move for tomorrow here. The nearest expiration on Nvidia is Thursday, March 28th. Currently, we have an expected move by close on Thursday of plus or minus $28.91 per share. Now, again, we don't have any earnings tomorrow or anything like that, so if we simply divide that by 2, we're looking at about $14.45 per day, assuming 2 green days in a row or 2 red days in a row. Again, if you have a mix, all of a sudden that daily expected volatility becomes quite a bit more because you still have to go $28 and some change in one direction according to the options chain. That is their expected volatility over the course of the next 2 trading days in this stock. Understanding that, along with a directional bias, can help you make much, much, much better decisions as an options trader specifically. Now, the call put ratio, the options bias. This isn't just relevant for the options, right? This is relevant for everything. 1.4 million total contracts traded here today. 904,000 of those were calls. 493,000 of those were puts. A heavy call side bias on the overall ratio today. And if we break that down by time frame, the 0 to 20 delta range, those are the short-term speculators, the short-term bets being placed. 310,000 calls, 225,000 puts. So not only are we seeing a call side bias in the overall ratio, but we're also seeing it out of those short-term speculators here today. If you got value out of this video, please subscribe to the channel. I greatly appreciate it. And by the way, hey, don't forget, leave a comment down below of your vote for tomorrow's Wednesdays in play stock, the wild card stock, right? This is a stock that I may not cover traditionally every day, but whichever stock ends up getting the most votes out of all the comment sections here today will win, and that'll be the one that I will cover tomorrow. I appreciate it, and I'll see you in the next one.